Equity Solution Incorporated conducted the financial statement as the following standard of IAS 16 required that PPE should initially be measured at cost, and our cost of an item of PPE are confirmed to have future economic benefit associated with the item that will flow to the entity. The cost of the item can be measured reliably as all the information and recorded accordingly. As we calculated the initial measurement, the total cost for building are 489,000.
Now, let's move on for the measurement of the initial recognition. Mfrs 116 require entity to choose either the cost model or the revaluation model as its accounting policy. Entity shall apply that policy to an entire class of property, plant and equipment. For the cost model, item of property, plant, equipment shall be carried as its cost less any accumulated depreciation or less any accumulated impairment loss. In revaluation model, item of property, plant, equipment or PPE whose fair value can be measured reliably shall be carried at the revalue amount. The revalue amount is a fair value at the date of the revaluation less any subsequent accumulated depreciation and subsequent accumulated impairment loss. Revaluation shall be made with sufficient regularity to ensure that the carrying amount does not differ materially from the which would be determined using fair value at the balance sheet date.
For revaluation model, the item of PPE is revalued and any accumulated depreciation at the date of the revaluation is treated as the building and machinery to which the asset belongs shall be revalued, eliminated against the gross carrying amount of the asset and the net amount restated to the revalued amount of the asset. For surplus or deficit, surplus shall be recognized in either comprehensive income and be credited to revaluation surplus. Deficit shall be recognized in support.
Here is the example of situation for initial measurement for investment property. The initial measurement consists of two models, cost model and fair value model. Cost model refers to cost less accumulated depreciation and impairment losses, while fair value model refers to the measurement of property is at fair value or market value. Any gain or loss arising from a change in fair value is recognized in profit or loss for the period in which it arises, and no depreciation is required under this model. Here is the calculation and example of journal entry for year 2022 for cost model. And this is the calculation and example of journal entry for year 2022 for fair value model. The accounting treatment for both models are based on Mfrs 140. The building is classified as investment property, which defines as property either land or building or part of building or both of it, which held to earn rentals amounted Rm 250,000, recognized as revenue in profit or loss for capital appreciation or both, rather than use it in the production or supply of goods or services or for administrative purposes or sale in the ordinary course of business.
This is the example of situation that containing subsequent measurement. The example consists the transfer from investment property to property, plant and equipment PPE. There are two methods to calculate, which are cost model and fair value model. Cost model method, property in PPE will be measured at the carrying amount of the invested property. Second, fair value model. Property will be measured at the fair value of the investment property on the date of transfer. Gain or loss after comparing the fair value and carrying amount is recognized in statement profit or loss, but this situation only containing the example of fair value model calculation. So, here is the calculation using fair value model. And here is the journal entries of the transaction. Lastly, the accounting treatment. The property is reclassified from investment property to property, plant and equipment PPE on 1st January 2025. Deemed initial cost of PPE is measured at fair value of investment property of Rm 85,500,000 as at date of transfer 1st January 2025. Changes in fair value of Rm 5,600,000 is charged to profit or loss as fair value loss. Depreciation of Rm 17,100,000 is charged as an expense in profit or loss.